war globally and its impact on commodity market, President-elect Donald Trump plans to raise tariffs on goods imported from China, Mexico and Canada. Donald Trump says he will impose 25% tariff on all goods coming from Mexico and Canada and will impose additional 10% tariff on goods imported from China. Remember, Trump had threatened tariffs on nearly 60% on Chinese goods while campaigning for presidential elections. China has clarified, saying MOFA or Ministry of Foreign Affairs will respond later on Trump's comments on tariffs. But what impact will increasing tariffs have on Chinese goods and on the commodity markets? Let's decode that further. We now have Amit Dixit, analyst at ICICI Securities, now joining us to decode the impact of tariff war on the commodity markets. Mr. Dixit, thank you so much for taking your time out and speaking with us here on ET Now. First up, help us understand and help us decode the impact of additional 10% tariff on goods imported from China. What does it mean for metals and what could the possible implications be?
Yeah, so for metals, see, it is still very early days, but for metals, it means that definitely there would be supply chain distortion. Last time, when in fact it happened, what happened that the prices in US particularly went up. So first of all, it will lead to the disconnect between the prices in the various regions. In case of steel, US prices anyways are quite different from rest of the world because of the tariffs, and this one only adds fuel to the fire. So steel prices in US might go up. The second thing is that in case of aluminium, the second impacted commodity, the premiums, the local premiums in US might go up, and that would be beneficial for companies such as Novelis. Um, Now, having said that, the other side of these trade wars is that essentially the growth comes under question because of the fact that China again is a major exporter, and if someone is acting against China, then that means it will lead to the inflationary concerns blowing up. And in any inflationary concerns, any increase in prices is not good for the growth. So these growth concerns might just come back. In fact, in 2018-19, when the tariffs were introduced, we saw that the valuations of metal stocks worldwide, I mean, it's not just in India. They were down by almost, I would say, 25 to 30% correction was seen in a space of a year. So it depends on how things space out, but yeah, these could be the impact of this decision if there is one.
Understood. And Mr. Dixit, you did talk about what happened when Trump was elected last time, way back in 2016. But help us understand what were the implications on metals globally when Trump was elected last time, and how is it expected to be different this time around?
Yeah, so this is an interesting question, I would say, because last time the concerns of inflation were not there in the economy, in the global economy as it is now. If you look at the base rate, interest rate, it is quite different from what it was in 2018. Even if you look at China, China was in a very different position in 2018 compared to now. So now the firepower that China has is much more subdued. So the I would say tendency of China or their ability to stimulate their local economy and consume that incremental stuff that goes to US might be a little bit diminished compared to last time. And then, as I mentioned, that the inflation is very different this time. So, any such, I would say, endeavor would further add to the inflation, particularly in the US, as far as these two commodities are concerned. Because do remember that US is still short on steel and aluminium, so they need it. But with this barrier or with this additional tariff, you will just get them at the higher cost, and that would in fact impact the downstream industries over there in the US more than it impacts China.
Understood. So this is likely to impact US growth and US inflation, but Mr. Dixit, another moving factor for China or for the global commodity market is China, and recent stimulus measures from China have barely moved the needle. How much more stimulus measures do you think will be considered adequate for demand to grow meaningfully over the next 1 or 2 years?
Well, we have not actually seen any, while we have heard a lot of announcements, but if you look at on the ground, we have not seen the money flowing in really. And that is something, so every time their authorities give out a statement, they fall short of I would say, quantitative color. There is a lot of qualitative stuff that, okay, things like, we will do this, do that, boost the real estate sector, etc., etc. But we have not seen anything really happening on ground. So that's why I said that the ability of China to stimulate its own economy, vis-a-vis last time, is far more diminished, and that is something which is worrisome, because if China kind of exports steel, it is already exporting to the tune of 111, million tons annualized. Now, if you compare it with 2018, it was like almost in 2018, if I recall correctly, it was to the tune of 70 million odd tons. So, thankfully, Russia is not that much active in global markets. Otherwise, the prices would have gone down significantly from these levels. But because of Russia not being active in export market, this incremental steel that is being churned out by China in the global market is being consumed. Now, having said that, if these barriers are imposed, then what can also happen is, and if China doesn't come with stimulus measures on its own, and the material keeps on flowing freely, then a lot of other countries also would be compelled to have barriers of their own, and that, in my view, is more detrimental, because that will stroke the inflation further.
Countries will also be compelled to impose restrictions. But Mr. Dixit, China per se has had a big influence on commodity markets, say, over the last few decades. Does not look like the trend will continue or change in the near term, but say over the next 15 to 20 years. Do you expect China's influence on global commodity market coming down?
No, so if you look at even now, if you see the steel consumption, for instance, between 2020 to what is expected by 2025, if you take these 5 years, you will find that in fact Chinese consumption in overall would go down. In fact, the incremental consumption will go down. India would be the place that would actually drive the global steel consumption, I would say, in these 5 years. Now, having said that, China just sits far ahead of others. So even with the diminished steel consumption, you have steel consumption which would like around, I would say, seven. If I'm talking about finished steel consumption here, which is around 720, 730 million tons, while Indian steel consumption is still like around 150 or 130 odd. So you still have a wide gap between the number one, and the same goes for aluminium, same goes for any other commodity. So the overarching influence of China would definitely be there. I don't see, even in 10, 15 years, no country, I mean, any country would not be able to catch up. However, incrementally, if you look at the incremental consumption, then that impact definitely would get diminished. Having said that, since they have so much spare capacity, they have their overall volume is so large. So let us consider that the steel market, for instance, the if you look at the seaborne market, and that actually determines the prices. So that seaborne market is roughly 330, 340 odd million tons, and there China contributes 111 million tons. So that contribution is very high, and if even if they increase or decrease it slightly, then that has got impact on prices. Similarly, in case of aluminium, if you look at ex China, so the total global consumption of primary aluminium ex China is roughly around 32 to 33 million tons. Now, out of that, if China ends up exporting like 6 million tons per year, so 6 million tons out of 32 million tons, that's a big number. So there the influence is there of China. And if this 6 suddenly becomes 6.5 or 7, that swings the needle either ways in terms of prices, in terms of your supply demand balance.
Overarching influence of China on the global commodity market is not expected to come down over the next 15 to 20 years. That's the word coming in. Mr. Dixit, thank you so much for taking your time out and speaking with us here on ET.
If you like this video, then like, share and subscribe to ET Now.